So if you're a new or a beginner crypto trader or investor, you're probably doing this mistake where you just buy coins or you just buy your cryptocurrencies after hearing that maybe this cryptocurrency is going up at the moment, and your investment in cryptocurrency is not quite informed. Maybe you have not done your research as you should, or it's a high risk investment and you realize that all the coins you've been buying are actually shit coins and probably high risk investments, and you don't even have maybe some low risk investment or medium risk investment. So why is this a bad thing? Now, this is a bad thing because what you're investing in, or the kind of investing you're doing in cryptocurrency, is unplanned and disorganized. Because if you're just going to invest in whatever you hear is going up at the moment, then you're probably going to end up losing your money. Now, today I want us to talk about how to build a well-balanced crypto portfolio. If you're a serious crypto trader or investor, you need to have a portfolio. And what is a crypto portfolio? Let's start with that. So a crypto portfolio is a collection of cryptocurrencies that is owned by an investor or a trader. And this portfolio, what it contains is basically assets that includes altcoins and various crypto financial products. So this has to be planned and organized. You don't just buy because you had somebody say this is going to go up, this is going to go up, this is going to go up. You're going to make a lot of wrong decisions. So I hope you have your pen and paper, and let's dive right in. Now, I want to start with a point I consider really important before anything else, before you even get into the market. Only invest money you can afford to lose. Because you realize some people invest the money thinking that because people have made millions in cryptocurrency, now they think it's a sure thing. Well, unless you're quite sure about it, but otherwise don't invest money that in case you lose that money, it's going to cause serious consequences in your financial life, okay? So just invest money where if you lose that money, you'd still be okay. Only invest money you can afford to lose. That is one thing you should consider before you even consider buying anything, okay? Number 2, do your own research. You realize that sometimes, especially if you're a new trader, you might be quite dependent on what other people say about particular cryptocurrency. So you might find that maybe somebody said Shiba Inu is going up, so you just want to buy Shiba Inu. Somebody said Dogecoin is going up, you just want to buy Dogecoin, and you have not done your research. You have not done your research, maybe even your technical analysis. You haven't looked at the charts. You haven't looked at what is moving this market at that particular time, so you don't understand. And maybe you haven't even looked at, am I too late to get onto the train? Is this time to now start selling? Because sometimes, yeah, it might have been going up for that particular moment, but when you get in, it's quite late and it's time for a reversal, okay? So you have to do your own research. Do not be fully dependent on what other people are saying. Do not be fully independent on other people's advice, because people could be wrong. And a lot of times you might find that somebody somewhere might have analyzed a different way, and when you do your own analysis, it's something different, and you might have the correct kind of analysis. So make sure you do your own research. Even if you get advice from somebody else, make sure you do your own research to affirm that advice before getting into that investment. I hope that is clear. Now, point number 3 is you need to split your portfolio into high, medium, and low risk investments. Because, for example, if you have a portfolio that has a majority of the portion allocated to high risk investments and maybe little to no low risk or medium risk investments, then that portfolio is not quite balanced. It also depends with your risk appetite. There are people who are really welcoming to big risks, but there are people who, they're risk averse. So you also have to understand your risk appetite for you to be able to know what kind of investments for you to take. And this comes with research. We said in point number 2, you have to do your own research. When you do your research, you'll realize this is quite a high risk investment, this is quite a low risk investment, and this is a medium risk investment. So when you understand the 3 concepts of medium, high, and low risk investments, then you're at a better place to really, invest in the risk that you can take. But it is quite advisable that you have a mix of the 3. Have your low risk investments, have your medium risk investments, and also have your high risk investments in a way that is balanced. Point number 4 is rebalance your portfolio if needed. Be flexible. If a need arises where you need to maybe sell some low risk investments and buy some high risk investments, or sell some medium risk investments and buy some low risk investments, you need to do that. Don't get quite attached to these cryptocurrencies and lose on a great opportunity. If you need to rebalance, if you need to move things around, sell this to buy that, or move some money from this kind of investment to this other kind of investment, then you need to do that when necessary. Next, you need to understand the classes of assets you want to invest in. So in the cryptocurrency world, there are very many different assets. There are gaming tokens, there are NFTs, there are DeFi tokens or coins, there are exchange tokens or coins. There are very many different kinds of assets in the market. So for you to understand what you want to invest in, or for you to have a well-balanced portfolio, you also have to determine what kind of assets do I want to accumulate in my portfolio. And we'll get back to point number 2, where I told you have to do your research. So you see why research is really important. It will guide you to a majority of these steps. It will guide you to choose a well-balanced, it will guide you to choose which one is high risk, which one is medium risk, which is low risk investment. It will also guide you to choose the asset classes, because it's not just Bitcoin and Ethereum, especially for new traders. It's not just Bitcoin, Ethereum, Dogecoin. There are quite a number of different asset classes. So do your research and realize what kind of classes do I want to get into. Last but not least, you need to have an investment strategy. Don't just start investing blindly, or because you've heard this is happening, so you just want to invest. No, you need to have an investment strategy. Know when to get in, when to get out. Know what to trade in, what to avoid trading in. If you find that something maybe was going up, you need to understand, okay, I have this strategy, I know when I should get in. Even if this has been going up, does it support my strategy? Is it viable to get into this trade at this particular moment? Have a strategy and stick to it. If your strategy is to have maybe 30% medium risk investments, your strategy is to accumulate 50% low risk investment and 20% high risk investment. Don't now remove your money from your low risk investment and put all of it into high risk investment because you had maybe there's an opportunity here. That might be quite a big risk you're taking, because things might go either way. It might either go in your favor or against it. But all you need to do is, whenever you're investing in anything that you choose to invest in, whatever asset class, if it is in stable coins, DeFi tokens, NFTs, whatever it is that you've chosen to invest in, always follow your investment strategy. Because a lot of time when we get outside our investment strategy, when we go outside our investment strategy, we end up making a lot of mistakes. We end up getting driven by greed because you want to make money, because people are making money from this particular coin at this particular time. So you ignore your investment strategy, you ignore all the things you look out for before entering a trade, and you just invest. So make sure you have an investment strategy. Make sure you know when to get in, when to get out, what you're investing in, why are you investing in that. Have an investment strategy. And that is the last point. And I hope this is quite informative. If you have any questions, make sure you leave them in the description box below. If you haven't subscribed and you've gotten this far, subscribe right now. Just subscribe right now, okay? And make sure you share this with your friends, people who want to get into cryptocurrency trading, so that they know how to build a portfolio as they're getting in. Ensure you let them know that a portfolio or serious cryptocurrency trading or investing requires you to be organized and have a well-planned cryptocurrency portfolio. And this is how to build it. And that's all for today. I will see you in the next video.